This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, February 11th, 2015. So the euro continues to consolidate off recent 11-year lows at 10.98, with the market now needing to break below 12.65 or back above 15.34 for the next clear directional insights. A break above 15.34, the high that we had seen back on the 3rd of February, will open the door for a more significant correction, exposing 17.50 further up. But ultimately, while the market holds below the 50-day moving average around 1875, the broader downtrend remains firmly intact, and we can expect to see a lower top at some points ahead of a bearish continuation. Of course, inability to take out 1534 will suggest that a lower top is in place there, with a break back below 1265 and a close below 1265 to expose the 1098 low, which guards against the psychological barriers at 110 further down. Sterling dollar. So cable has recently broken above 152.70, which had been some resistance, some multi-day range resistance, and this has taken some of the pressure off the downside, with the market potentially exposed for more corrective activity towards some previous support at 54.85. But ultimately, any rallies are viewed as corrective, with the market still locked within a broader underlying downtrend, and a lower top is sought out somewhere around the 54.85 area ahead of the 54.85 area in favor of a fresh downside extension back towards the 2015 low at 49.51 and below. Dollar yen. So dollar yen is one of those markets this week that has been on the move a little bit, with the pair breaking out from some triangle resistance and trading back towards the 120 area. But ultimately, the market is still locked within a broader range between 121.85 and 115.55, and we'll need to see a break on either end for clearer directional insight. But given the overall trend is overwhelmingly bullish, look for the market to trade back towards and above 121.85, that's the 7-year high from December, in favor of fresh upside towards 125 further up. Ultimately, only back below 115.55 would delay the immediate bullish outlook. Euro Swiss. So Euro Swiss continues to consolidate a little bit after breaking above some key resistance at 102.50. That break, however, does expose a measured move target of 107 further up. So expect any setbacks to continue to be very well supported, with only a break back below that previous resistance at 102.50 to compromise the newly adopted bullish outlook. Aussie dollar. Aussie has been trading within a well-defined downtrend, but has recently been consolidating after breaking to fresh multi-year lows at 76.25 back on the 3rd of February. A break above 78.76 would open the door for additional corrective action, while inability to take out 78.76 keeps the immediate pressure on the downside for a break of 676.25 and bearish continuation down towards major psychological barriers over the medium term at 70. However, there is still the possibility that this correction does continue above 78.76, and a lower top could be sought out somewhere, ideally around the 80 area, in favor of a bearish resumption. Dollar CAD. So dollar CAD continues to trade well above the 20-day moving average, with this market locked within a well-defined uptrend, recently stalling out by multi-year highs at 128. But again, the market is now looking to form the next higher low ahead of a bullish resumption and retest of the 2009 peak, which comes in just shy of 130.65. Kiwi dollar. So Kiwi dollar has been in the process of correcting over the past several days since breaking to fresh 4-year lows down by 71.76 on the 3rd of February. But the market should find some resistance towards the 75 to 76 area, with the 76 area acting as some formidable previous support now turned resistance. A lower top is ultimately sought out in favor of a bearish resumption back below 71.76 and towards psychological barriers at 70 further down. SPX 500. So while the S&P 500 has been bid over these past several days, if you look at the chart going back the past few weeks or couple of months, the market has been locked within a choppy consolidation off record highs, showing the potential for some form of a top as it continues to stall out on its attempts towards the 2070 area. But a break back below recent lows that we saw at 2040 would be required to put the pressure back on the downside and strengthen the outlook for a top, for some form of a major top in U.S. equities. The SPX 500 key support comes in at 1968. That's the 16th of December low, and ultimately this level will need to be broken to confirm the top and expose the October base at 1820 further down. A break and close above 2070 on Wednesday would take the pressure, or would relieve the outlook for a potential top and expose an immediate retest of the record high from late December, just shy of 2100. gold. So gold has seen a bit of a pullback over the past several days, although the market has now dropped into some solid previous resistance now turned support, and with the market recently breaking above some key resistance at 1256, the outlook has shifted to the constructive side, and a medium-term higher low is now sought out somewhere ahead of 1200 in favor of a fresh upside extension back above the recent highs in the 1307, 1308 area and towards 1345 further up. That's all for today.